A very warm welcome to another episode of the Outside Podcast. Today we have Mr. Robert Mogielnicki, is that right?
That's right.
Mogielnicki,
Yeah, good job.
yep, who is Senior Resident Scholar at the Arab Gulf States Institute. He's speaking with us from Washington, D.C., and he's a leading expert on the Gulf and the role of the global economy. Apart from lecturing and writing, he also advises senior corporate government decision makers on the Middle East and North Africa. And he's just published a book called A Political Economy on Sovereign Wealth Funds in the Middle East and Asia. Good morning, Robert. How are you?
I'm doing great. Thanks for inviting me here. Thank you for the introduction. And I should just say that while I was the editor of the book, I also need to give some credit to the contributors too, because it was an edited volume. So I had a good group of contributors who helped me out.
Cool. Maybe if you could start from the very beginning about, this particular book. How did the idea of the book start? Were there any particular key motivations to writing this book? Because you've done a couple of books in the past.
Sure.
What's different about this one and, the timing to pursuing this particular thesis?
Great. Yeah. Well, my first book was a monograph on special economic zones or free zones in Gulf Cooperation Council countries. So it was really a deep dive into the drivers of these entities that many in the region will know quite well as important facilitators of trade and investment. So I spent a lot of time thinking about special economic zones, free zones. But in my current roles, you mentioned a couple of the hats that I wear. I mean, my full-time role at the Arab Gulf States Institute is one in which I oversee the political economy portfolio of Gulf states. So I'm constantly thinking not just about different industries, sectors, and themes that fit into this political economy portfolio, but also important geographies in the world that are playing a role in the political economies of these states. At the same time, I teach at Georgetown University a course that I created, and I've been teaching for a few years now, on China, Middle East, and North Africa relations. And that course has forced me to grapple with the different ways in which we see linkages between China and Middle East and North African states, but I have a particular interest in Gulf states. And of course, there are linkages formed by oil. There are linkages formed by people-to-people ties. There are diplomatic ties. There are a number of different ties. But I was increasingly seeing kind of investment ties playing a prominent role between these two regions, especially on a rhetorical sense. And I wanted to dig in a little bit more into to what degree we're actually seeing those investment ties being facilitated by sovereign wealth funds, playing an important role in connecting these two regions. And that, of course, fits very, very well with my broader portfolio at the Arab Gulf States Institute, too. Asia is a huge player for the Gulf. I mean, it's a huge destination for Gulf energy commodities. And increasingly, it's an important investment destination, too. So that was really the genesis of the idea. Like, okay, these are two really important regions. And how are they connected via sovereign wealth? And then so I started to look at, on a very basic level, it's like, well, let's look at the sovereign wealth funds. Let's look at the global list of the biggest sovereign wealth funds in the world. And that kind of reaffirmed to me the importance of the study, or at least the significance of using sovereign wealth funds and sovereign wealth as a way of understanding the connections between these two regions. Because if you rank the first dozen or so 15 largest sovereign wealth funds in the world, and you knock off Norway's, which is clearly, clearly not for any bad reason, just because it's not part of the regions we're discussing today. Pretty much all of the rest of the
them.
top, 15 or so next largest sovereign wealth funds are all from the Middle East, in particular Gulf countries, or from Asian countries. I thought, wow, there's something very obvious going on here, and I need to dig in a little bit more. So it was kind of a combination of an area that seemed to be important and timely and relevant from a policy analysis perspective, also from an academic perspective. When I looked at the actual list of the world's, the top sovereign wealth funds as of a couple of years ago when I started this book, that reaffirmed the importance of the study even more. And as I got the book underway and grappled with different ideas and engaged with contributors and shared expertise with a whole range of different folks, I found that actually there are a lot of governments all around the world and a lot of investors who are quite interested in these dynamics too.
Mm. No, for sure. And I mean, when you started, I'm sure you had certain kind of initial assumptions about where the direction of the book was going to take. Now they've come to the end of the book. Did your conclusions kind of match any initial assumptions that you had? Were there any particular surprising discoveries that you made along the way?
Yeah, well, a couple of things come to mind. I mean, first, um, one one assumption I had, or one hypothesis I wanted to test out was to what degree the rhetoric that I was hearing in the Gulf, that Gulf sovereign wealth funds, or at least the officials at sovereign wealth funds, wanted to increase, the Asian assets in their portfolio. Uh,
Mm,
and you've got a number of different kind of targets that we've heard over the past couple of years for a range of different funds, whether they're Abu Dhabi's funds or the Qatar Investment Authority or others. Um, we heard some like pretty, I guess you could say, pretty ambitious targets in terms of moving the kind of geographic distribution of assets to a weightier proportion, in Asia. Not
mm,
a majority. I'm not saying that, but we're talking about relatively low thresholds for starting, and there was an interest in boosting those thresholds. I wanted to see to what degree that had actually materialized. So that was one hypothesis that I really wanted to look at. And I found that actually, in terms of the overall distribution of the portfolios, there hasn't been a huge shift. I mean, we haven't seen like a paradigm shift in the geographic distribution, but important inroads have certainly been made. I mean, certain funds have targeted key markets in Asia and have made important inroads, whether it's the Abu Dhabi Investment Authority playing an increasingly important role in India, and that's been followed by ADQ, also an Abu Dhabi based firm. That's just one good example. We've seen a number of other firms or sovereign wealth funds in the region signing MOUs, which are not final investment decisions by any sense, but do indicate some sense of strategic intent with China's sovereign wealth fund, the CIC. So, I mean, we're seeing indications of this for sure. And there's a lot, and it goes a lot deeper. But I said, if we're not seeing a paradigm shift in portfolios necessarily, like what are the connections that are going on? Where do we see these intersections of sovereign wealth? Whether it's kind of Middle Eastern sovereign wealth fund investments in Asia, or if it's Asian sovereign wealth fund investments in the Middle East. And when I started thinking about the connections in those terms, not just on a very basic kind of portfolio allocation sense, there are a lot of layers to dig into. I mean, you're looking at the different types of assets that these investment flows are moving into. That was interesting. That was interesting to look at. The different types of partnerships. So sometimes, we're seeing examples of co-investment between Asian sovereign wealth funds, Middle Eastern sovereign wealth funds. We're also starting to, what we also saw in the book were ways in which different co-investment partnerships and structures were happening with different objectives. So, and sometimes the co-investments we're looking at, two funds, one from the Middle East, one from Asia. I mean, being part of the consortium, seeking to invest with the ultimate goal of investing in, the other's economy, maybe in Asia. In some instances, with the ultimate goal of investing in, say, a Middle Eastern economy, and sometimes, partnering on an investment in a third country. So there were all these kind of different, interesting ways in which these investment partnerships were structured. And then I started thinking about, okay, well, sovereign wealth funds in the Middle East and Gulf countries, many of these sovereign wealth funds are also playing an important development role within their own economies. I mean, there are a number of ways to define sovereign wealth funds, but one of the types of funds that you hear a lot about are development funds, or funds being used for kind of domestic development purposes. That absolutely applies to a fund like the Public Investment Fund in Saudi Arabia. So then I started thinking about, well, wait a minute. If we were to broaden this aperture a bit, and you were to think about all of the different companies that the public investment fund has created, where do we see examples of those companies owned by the public investment fund, Saudi Arabia Sovereign Wealth Fund, partnering with Asian companies or Asian sovereign wealth funds, or or seeking to tap into Asian markets? That was kind of a whole nother level of sovereign wealth fund related linkages. And the same could be said, thinking about it in another direction. A number of the major development projects and initiatives in the Gulf. I'll just stick with Saudi Arabia because it's an easy example. Um, a lot of those projects are attracting interest from Asian multinationals and other investors. So, for example, NEOM, large city in northwestern Saudi Arabia, that's owned by the Public Investment Fund, as are many of the giga projects taking place, across the kingdom. The Asian Winter Games are supposed to take place in a few years, I think 2029, in one of the destinations within NEOM. Again, this is a project owned by Saudi Arabia's Public Investment Fund, and I just mentioned the Asian Winter Games, but kind of going deeper than that, you can find a number of Asian companies being involved in all different stages of the development process of these major projects. So again, you've got to go down a couple of different layers here, and it's digging pretty deep, perhaps deeper than some people would be interested in going. But I found it really fascinating as part of this book. What I will say is, at the end of the day, we acknowledge the fact that a small handful of scholars, practitioners, we're only going to make a small dent in this topic. So part of this exercise was basically to say there hasn't really been a book that looks exclusively at sovereign wealth funds in the Middle East and Asia. This needs to be done. There have been books that look at global sovereign wealth funds. There are plenty of books that look at sovereign wealth funds in the Middle East. There are books at sovereign wealth funds in Asia. There's a reason to look. There's good reason to look at these two regions side by side, with sovereign wealth being the kind of linking factor. It's a big topic, and we're just going to kind of open the door to that topic. And part of that process was saying, let's get a bunch of smart people together and you say, if this is the topic, what is most interesting to you to cover? And even the chapters that the contributors put together, by no means a kind of comprehensive assessment of these relationships, which are continuing to evolve and hopefully keep those of us like you and myself in business. But just seeing what attracted people who work in this space to cover and to write about was itself informative. So, I can those who are interested in the book can find it online and see the different chapters, and maybe we'll get into some of those topics
Yeah,
later in our
actually,
talk.
I was just wondering, like, how far back do you trace the history of, the formation of sovereign wealth funds? I was very fascinated to learn actually for in the Middle East. I think Kuwait is the oldest sovereign wealth fund, not just in the Middle East, but actually the world after
Yeah,
they discovered oil reserves.
yeah,
And I'm sure since then, as we saw a number of the other Gulf states start to form their own, they discovered oil and then they started to form their own sovereign wealth funds. There must have been some sort of exchange in terms of investment philosophy, approach, governance, institutionalization of some of these resources. How did that? I don't know if you could help me kind of trace that evolution. And do we see any distinct differences within the Gulf? And then when you take the Gulf and you compare it to Asia, what kind of similarities and differences did you see?
yeah, yeah. Great question. So you're right. Sovereign wealth funds, I mean, they've been around in the Gulf region for some time. But that's not to say that they've been necessarily behaving in a consistent fashion throughout that entire period, or that sovereign wealth funds in one country necessarily reflect the behavior of a sovereign wealth fund in another country. So you're right that Kuwait is generally regarded as one of the oldest sovereign wealth funds, if not the oldest sovereign wealth fund in the world, created in the mid 20th century. And it's kind of generally regarded as, it's very professionalized. It's kind of, um, it's not, it doesn't take the kind of high profile, it doesn't necessarily engage in the very high profile investments that some of the other sovereign wealth funds have in the region have come to be known by in the past couple of years. Kuwait Investment Authority, it's massive. It's one of the biggest. All of these assets under management are estimates. I mean, you've got some good outfits out there like global sovereign wealth funds and others that give very good estimates. All of them put, most of the very good outfits out there put the assets under management of the Kuwait Investment Authority, along with Abu Dhabi Investment Authority and the Public Investment Fund more recently, at all around $1 trillion or a little bit more, in excess of that. Now, Kuwait's sovereign wealth fund has been around for a long time and has a very interesting infrastructure or division of offices where there is a substantial amount of that portfolio which is allocated toward and controlled by a London office. So Kuwait has a London office. Interestingly, the only other office outside of official branch office outside of London is. Do you have any guess?
No idea.
Uh, well, first they opened up a an office in Beijing, and then
Oh,
they changed that office. Now, if you go on the KIA's website, um, that office is there's an official kind of investment. I forget the terminology they use, but investment branch office in Shanghai. So it was
okay.
moved from so
From Beijing to Shanghai.
correct. Um,
Ah,
and so that's kind of very, very, very interesting. And one of the oldest, at least Middle Eastern sovereign wealth funds. It's got there's an office in London with a certain degree of autonomy. At least has its own, has an investment portfolio that it manages. And then also, of course, a Kuwait office. And a lot of this division of the investment portfolio and the structure. I mean, you would be silly to not think that the Iraqi invasion of Kuwait didn't play a role in this, both in the way that these investments are structured, its investment approach, which is kind of lower profile, kind of safe, consistent returns, risk adjusted returns, is kind of the name of the game there, and really with this focus on saving for future generations. And one of the funds within the fund is the Future Generations Fund, and that's something you see other funds having as well. But it's really safeguarding wealth for the future, and I think a lot of that is described, can be described from the trauma of the invasion. And I think a lack of willingness to change kind of investment structure and to pivot like some of the other funds have and invest more domestically, like Saudi Arabia's fund, like some of the others, I think is also just is a carryover from the very distinct experience that Kuwait had in the region, and its resulting political economy. So Kuwait Investment Authority, very, very interesting. By the way, I will say it's not immune to kind of some of the factors shaping sovereign wealth funds in the region, because we have started to hear some reports that the Kuwait Investment Authority has or is studying the potential for creating a smaller fund, maybe a few $1 billion that would invest domestically. Um, they really do not. The sovereign wealth fund does not play the kind of role that we see the Saudi Public Investment Fund and even a number of Abu Dhabi, the UAE funds, the Oman Investment Authority, Qatar Investment Authority doesn't play that domestic role
yeah.
that we see others playing.
Which actually is a pretty recent phenomenon from what I'm beginning to observe, right? Like
Yeah.
you definitely saw UAE kind of spearhead that whole move to invest locally, and then PIF from Saudi followed. And then more recently, Qatar as well. Oman, even to a certain extent.
Yeah.
So Kuwait is kind of following, which is, I mean, I don't know if I guess has UAE always been kind of the leader in historically when it comes to uh you know sovereign wealth fund, at least on the sovereign wealth fund side of things,
Well, yeah. I
leadership
mean,
on how funds should be deployed and
eh, you know, the unsatisfying but generally correct answer is always it depends. So Yes, I mean you're right in the sense that this kind of domestic focus for sovereign wealth funds is relatively new. Although there's an important caveat that I'll get to in just a minute. I mean, I think the reason why in on one level it's correct is that a major impetus for these sovereign wealth funds was economic diversification and hedging against developments within the region, be
Mm,
they kind of invasions or other forms of political risk
mm,
that could impact industries. So the idea it was no, we want to invest outside of the region. In usually those investments materialized in developed economies. Big focus on London, on the U.S., also other other European countries, um, and you even see that today in the way in which some of these sovereign wealth funds report the geographic distribution of their assets. You'll see Europe being a kind of Western Europe, and the rest of in some of the funds still report this differential in the Europeans in the European countries that they invest in. Uh, so the idea, but there was also this part of that picture was economic diversification. How do we, I mean, many of these countries, not all of them, but many of these countries largely fund their government revenues and also sovereign wealth funds by proceeds from energy exports, be it crude oil, um, natural gas in Qatar's case, or in a whole bunch of other products, downstream products too, that play an important role in government revenues. So the idea was we got to diversify away, hedge against downturns in these industries, and that's what is going to be. That's a useful strategy for us to pursue. Now that kind of I think that attitude lasted for a period of time, and in many respects still continues within certain funds, within certain parts of the portfolios of these funds. Absolutely. Um, where things I think start to change are in a couple of different ways. Uh, One is that some countries or emirates, if we're talking about the subnational level, like Abu Dhabi, they
mm.
have a number of funds to work with. So
Yeah.
you've got Abu Dhabi Investment Authority, one of the largest in the region in terms of assets under management. You've got Mubadala, which is kind of the next largest fund, a few hundred billion in that fund. And then you have a more recent addition, Abu Dhabi ADQ, which is a more recent fund, used to kind of operate as a government conglomerate or holding company, and that was kind of rejiggered into a sovereign wealth fund. So this kind of a number of different sovereign wealth funds in one political, in one polity, or whether we're talking about at a national level or a subnational level, for governments to play with, gives Abu Dhabi's leadership a lot to work with there. So they can use funds in different ways. And we're seeing, and
Mm,
when we're seeing that, we're seeing some funds still having a very, very heavy focus on international investments.
mm.
Other funds maybe have more room to play a domestic or even a regional role. So
Yeah.
ADQ has made big investments in Egypt, in Egypt, especially real estate and development deals in Egypt. That is largely outside of the traditional scope
Mm,
of what we think about in terms of Gulf sovereign wealth fund investments. But this is a newer fund. It's got it's slightly different. Appears to have a slightly different investment focus. Not as necessarily as strong of a adherence to a particular set of returns
mm,
or a time frame. So and then you've got Mubadala, which kind of plays this other interesting role. So one, the countries that have a number of firms to play with, number of sovereign wealth funds to play with, can experiment around with different strategies. The other point I'll say is that energy exports and proceeds from hydrocarbons are absolutely critical to the region. Anybody who tells you otherwise is doesn't fully understand the region. It's
mm,
still critical for government, a majority of government revenue in every Gulf GCC state.
mhm,
Um, and it's an important part of a lot of those proceeds make their way in one shape or other into sovereign wealth funds, or important energy companies like Aramco, for example. These sovereign wealth funds own shares of Aramco that enable them to dividends, preferential, lending, all of that sort. So they benefit a lot from the energy and gas sector. And by the way, one of the important ways that I connected kind of Middle Eastern sovereign wealth funds to Asia is that the biggest customers for energy exports are Asian countries, are in Asia. So even at the very beginning, if we were to think about what's the genesis, I mean, I don't want to get into the kind of question of where life begins, because here that's a very sensitive topic, politically in the U.S. But for a sovereign wealth fund, less sensitive. Where does life begin for a sovereign wealth fund? Where do the financial resources originate? You can trace it back. You can trace it back to to a energy trade relationship wherein Asia and Asian customers play an absolutely critical role right from the beginning. But that's not to say that all of those that these sovereign wealth funds have been built up entirely on proceeds from energy exports. In fact, a lot of the sovereign wealth funds that we see in the region, the Public Investment Fund being a good example, ADQ in Abu Dhabi, these funds started out in as government holding companies. All right.
Oh,
So the
not
public
out
investment,
of like sovereign resource, like sovereign assets,
yeah,
like out of
exactly.
the
Well,
oil, the proceeds of oil.
so again, it doesn't take long to get to oil or to oil and gas sector in this region. But if we were to look at the Public Investment Fund, it was created in the 70s, and it was essentially a holdings company for state-owned entities, and it stayed like that, kind of quietly holding state-owned assets for decades, and only really started to act in the way in which we think about the Saudi Public Investment Fund over the last few years, when it was rejiggered, reconfigured, and I would say empowered by Crown Prince Mohammed bin Salman, who reconfigured the fund to kind of work in large part as a financial engine behind his Vision 2030. It's just something very, very similar with ADQ in Abu Dhabi. Now everyone talks about it as a sovereign wealth fund. When I first started looking at ADQ and hearing about ADQ, and even following what like Bloomberg's sovereign wealth fund correspondents based on the region were saying, they were not referring to it as a sovereign wealth fund. At a certain point in time, they started to, but that was kind of marked its transition into into a sovereign wealth fund. So I mean, for some of these funds have a substantial, a substantial part of their portfolio to this day consists of government, holdings of government companies or government, state assets and government-related entities, and that explains. I mean, if you look at the portfolio and you don't know the history of some of these funds, it doesn't mean that these funds, sat on a boatload of cash and invested it all into purchasing these state assets. I mean, a lot of them, that's how they emerged. They had these state assets and they continued, they kept them. So then the question then becomes, where do they go from there? I mean, and that was the interesting question. With this being the basis, say in the Public Investment Fund, where are we seeing kind of future investments going, and where does that split between the kind of domestic assets and foreign assets, and especially foreign assets in Asia? Where are we starting to see any important trends or inflection points from there on out? Now, I think the big, the big difference which came up in the book with sovereign wealth funds in Asian countries is that they are not is I mean, if you were to go all the is really comes down to the origins of funds, right? It's not very few of these countries in whether we're talking about China or or Singapore. I mean, these are not oil and gas exporters. These are net importers of of oil and gas. So we're talking about sovereign wealth funds that were built up through through trade surpluses. Um, and that's a huge difference. One of the contributors in the book actually looked at the origins of funds and said, well, if you take the biggest funds from the Middle East and take the biggest funds from from Asia, if you look at it, they've got very different sources, origin of, of their financial resources and their assets.
Mm.
Does that result in different investment behavior?
Yeah.
And it's a good chapter. It's the first chapter of the book. So I'd encourage others to actually read it because I can't do justice to the contributor. But the answer was, by and large, no. It didn't really explain major divergences in investment behavior because these funds, they get to a certain size, they professionalize, they're pursuing, similar deals. And actually, kind of one of the insights, one of the takeaways from that chapter was it's kind of reaching a certain threshold of size is very important for
Mm.
a fund, more so, especially after it's been created, more so than the, original, like the origin of, of resources and the financial resources that enable investments. So it was
Interesting.
kind of, it was an interesting, it was a question though that we grappled with, but I think that's the clearest difference that you see when you kind of break down sovereign wealth funds from on the Middle East side and the Asian side.
Yeah. I mean, from the sounds of it, it does sound like there has been a bit of an evolution from among the Gulf sovereigns, not just on the way that they see themselves, because they are also evolving. But I wanted to ask, like, their relationships with Asia and with Asian sovereign wealth funds must have also gone through its own evolution. How do Gulf sovereign wealth funds look at Asia before, and how are they looking at Asia today?
Yeah, it's I'm reminded of a conversation I had earlier a few months ago where I think it was the head of Global Sovereign Wealth Fund said, if you know one sovereign wealth fund, you know one sovereign wealth fund. So I don't want to put them all into one
Mm,
bucket. I don't want to put them all into one bucket, but naturally for analytical purposes, I did precisely that in this book. But for the purposes of our conversation, look, I think we see sovereign wealth funds in the Middle East, in particular in the Gulf, tapping, I'd say, opportunistically into Asian markets. I think there, if you look back a few years ago, um, there was very, very optimistic statements about the potential of the Chinese market. I
mm,
heard this from Abu Dhabi funds. I heard this from the public, from Saudi Arabia's fund and others. I think a number of things happened over the past few years especially in China, that did create some, that created a little bit of concern about investing, I'd say, too many sovereign eggs in the Chinese basket. I think one was the very strict crackdown during COVID on the economic implications that had in China. I think perhaps more concerning for some of the sovereign wealth funds was also the kind of government approach to the technology, to technology executives and technology firms. I mean, kind of
mm,
crackdown. Maybe people talked about it as a crackdown. I'm not sure, those who follow, political dynamics in Asia and China would have better terminology to use. But by and large, I mean, a lot of state pressure on Chinese technology firms, many of which, the technology space is an area that Gulf sovereign wealth funds are very, very eager to get into and want to tap into,
mm,
the technology domain in a number of Asian countries. So this was an area that I think, again, gave them pause, not sent them running from the market, but said, "Yo, okay, we've got to see where things go." And then
mm,
also kind of ongoing concerns about, uh, about the real estate industry
mm,
in China. You put all these things together, and then if you were to add on that the U.S. dimension, and I like to tell my students that when we talk about China and the Middle East, the U.S. always looms really large in that conversation, for better or for worse. Um, but I think if you were to look at the last couple of administrations, maybe the one issue that there's been very consistent bipartisan support for is that the U.S. needs to be tough on China. That was
mm,
with the first Trump administration. That was with the Biden administration. Many conservatives will admit, they'll say even the Biden administration was not soft on China. In some ways, it was tougher on China than Trump was in his first term. And then we now have the kind of Trump administration too, where we did see trade war escalating substantially. I think all of this, given the incredible diplomatic political capital that we see Gulf capitals waging in Washington,
Mm,
putting their chips on the table in Washington, ensure that they have solid working relationships with the Trump White House. I think all of this really raises the stakes for making big long-term investments in China. Now, I'm not saying that that has prevented investment, so that's prevented MOUs from being signed. No, it hasn't. But I think if I were to try, if I were to try to venture my best analytical guess, I would say that the lack of massive momentum over the past few years in terms of Gulf sovereign wealth fund investments in China, um, just in terms of nominal value, in terms of percentage of the portfolio, um, I would say that all of those factors have contributed to that. So again, I mean, we see sovereign wealth funds opening up offices. They want to be closer to the action, whether it's in, a lot of focus on Shanghai, but
mm,
also in other parts of China too, Beijing, opening up offices, getting closer to, having people on the ground in these markets. So they know that it's a really important economy, but I think it's one that they think we need to really understand the market, understand the firms that we're, and assets we're investing in order to proceed with confidence. I think you see the same, in India. This is a similar situation. Some sovereign wealth funds have made big bets in India. ADIA has been the Abu Dhabi Investment Authority. I think in my book was described by one of my contributors as kind of taking a leading role in India.
mhm,
Um, and the Indians, for their part, have been quite interested. This is a two-way street. The Indians have created the NIIF, which is this
mhm,
kind of facilitator fund of investments. It's sometimes described as a sovereign wealth fund, but it's really kind of a facilitator of sovereign wealth fund investments. Um, and again, I think there is you look at India. This is another country where Gulf countries are saying this is where growth and energy demand is going to come from for a long time. We've got countries like the UAE have really strong socioeconomic linkages outside of of the energy space, um, and this is also a country where you've got this, like a pretty encouraging and I think promising
mhm,
entrepreneurial class, entrepreneurial, um, budding entrepreneurial ecosystem, shall
mhm,
we say, and combined with a massive concentration of wealth, billionaires who own conglomerates, and we actually see sovereign wealth funds kind of partnering and making investments on both sides of that spectrum, on the kind of on the smaller scale entrepreneurs that do think, wow, they have big potential. If one of these entrepreneurs gets it right, whatever it is it going to be in the telecom space or digital services or healthcare, huge implications for a market like India. And on the other side, you've got the big players that Gulf sovereign wealth funds are very comfortable working with. There's
mm,
all of the familiar names in Adani and and others, very familiar working with in their groups. So I think there's interest there. The Like I said, Abu Dhabi funds have been quite active. We're starting to see some indications of the Saudi Public Investment Fund wanting to tap into the Indian market more, and I think the
mm,
Indians are trying to encourage that with. There were news reports a few weeks ago about some incentives being provided to enable Saudi public investment fund investments in India. I think a relaxation on some of the curbs around foreign ownership in certain sectors, and then talk about potentially maybe having tax exemptions on certain industries, be it
mm,
energy or infrastructure. So we're starting to see that now. Sometimes we can kind of forget about, we just talk China and India, and we don't give due credence to the other really important, a number of other important Asian countries, Singapore, South Korea, Japan. Um, I wrote one of my chapters on Oman. the
Mhm.
Oman Investment Authority. It's a very interesting fund. Again, I think doing great things, doing great work across a range of different portfolios. It's got that international investment um, focus. It has a domestic development role, but also has kind of been playing an important role in economic reforms within the country.
Hmm.
I won't get into too much detail because I could go on and on and on. It's been playing an important role in a country that really needs to get economic reforms right, and it's been, at least not just by my measure, but according to the IMF, the country's new leadership has really put it on a positive path, given that it's got a lot less to work with on the financial side of things. But that being said, the Omanis and their sovereign wealth fund very interested in South Korean companies,
Hmm.
very interested in Japanese companies as well. So we're seeing a lot of interesting kind of delegations, MOUs, and even investments. I mean, moving toward more substantial investments with a South Korean, Japanese companies, particularly in the semiconductor space.
Hmm.
So, you know, advanced technologies, not the most advanced technologies, um, but Oman has kind of got to play a more modest. It plays a more modest approach, and part of that is just based on size. Like the Omani sovereign wealth fund's got about around 50 billion in assets under management.
Hmm.
It's not a huge oil and gas exporter like Saudi and the UAE. So it's got to make more modest, some modest bets. But it's doing that. It's not going after the cream of the crop, the top tier of the tech industry like some of the other players. It can't afford necessarily to do that. But then a whole range of very, very competent, very interesting, and I think promising, companies in your, whether it's in Singapore, whether it's in South Korea or Japan, then they become very, very interesting to a fund like the Oman Investment Authority. And by the way, I mean, there are a lot of important linkages too between other sovereign wealth funds and these countries. It's not by any means just Oman, but it
Yeah.
was a good opportunity to plug a country that isn't always discussed in these conversations.
Yeah. I wanted to ask a question actually about, especially when it comes to corporate governance. I mean, I think one of the interesting things about sovereign wealth funds is they really kind of sit at an intersection of national interests or government, capital, and how some of these motivations and allocations can kind of influence, I guess, the world at large, right? And you
Yeah.
talk about things like technology, especially in a world today where dual use technology is that's everyone's discussing about that. How do we know this piece of technology is not being used for dual purposes? Um, all these concerns about espionage, especially between US and China. I'm just wondering, especially when it comes to some of the Gulf, like have they even evolved when it comes to drawing like a firewall between some of these things, right? On the tech front, that's on one aspect. How do you kind of draw the line between those? And even when it comes to national interests and financial returns, how do they draw the line there too? Because, and I'm sure there must be varying, how say the UAE does that versus how PIF does that must look quite
Yeah.
different.
Yeah. It's a really important question because it does get at the heart of a lot of angst that can be perceived in Washington about the objectives behind sovereign wealth fund investments. I was just in a conference in London, and one of the participants who came from an Asian who came from Asia to participate described that feeling in Washington as strategic anxiety, which I thought was interesting. Um, Maybe that's the case. Maybe we need some better medication for strategic anxiety here in the U.S. But uh, yeah, we see this. I would say angst about the ultimate objective of sovereign wealth fund investments in the U.S. in U.S. assets. So we've seen that across a range of issues, from ports many years ago to other forms of critical infrastructure to assets we would not think of as critical infrastructure or directly related to national security like golf. But anyway, raised, it created quite a stir. And I think a lot of it comes down to not always just the national security concerns, although those are, of course, front and center for governments,
Mm,
but also like what is the objective here? Is it purely economic, or is there a kind of non-economic and political objective here that then gets one to thinking about various forms of influence? And I think the same can be said in looking in the other directions. It's like as partnerships between, say, the U.S. companies and Gulf sovereign wealth funds, or investment partnerships or otherwise, ramp up. We have plenty of examples of that in the region. Microsoft and G42, which is a big tech
mhm,
conglomerate in the UAE. You know, how do these governments think about their relationships with Asian, counterparts, Asian governments or companies that in some instances may pose national security related concerns. So I think that kind of concern works in both directions. Um, and I think the problem is there's not a clear cut answer. It's in the line in
blurred.
the region that you draw between where government stops and where business ends
Mm,
is is fuzzy.
mm,
And I mean, sovereign wealth funds is a perfect example of that. I mean, at the end of the day, um, sovereign wealth funds are pools of sovereign wealth owned and steered and controlled, by governments in the region.
mhm,
Now, the really professional sovereign wealth funds will have good people working there who aren't even necessarily from the countries mentioned.
mhm,
They'll just be investment professionals, and ideally, we also have seen in a number of funds that are established and professionalized various investment committees that you know, in theory, and I think in most instances, are making investment decisions based on the best knowledge that they have, based on the processes that they put in place to ensure, the best possible um, financial outcome.
mm.
Um, you know, I guess that being said, in these countries, the political economy of these countries are as such, where you have, monarchs, leaders, rulers that there you never have a complete separation. I mean, there's not a institutional safeguard to say that if the leadership of a particular Gulf country, we'll just focus on the Gulf because um, if we broaden it too much, we get into different political systems. But the that if the leadership didn't want to intervene in the way in which sovereign wealth funds worked, whether it's how they different asset transfers to the sovereign wealth fund
Mm,
or even investment decisions. I mean, there's nothing institutionally that absolutely stops that from happening, but
mm.
there's a lot of reasons for these governments not to do that.
Yeah.
And it's precisely comes down to the reputation point of view. It's like that these governments are better off, economically speaking,
Mhm,
but also if there are other non-economic aims, whether it's kind of making strategic investments to improve the stability of the region, which is something that policymakers in the Middle East think about a lot.
mm,
And I think you could, if you wanted to read into it, I think would be an important explanation for why some of the sovereign wealth funds have created investment offices in countries like Sudan, Iraq, and others in the region, Jordan, not necessarily the kind of most attractive investment destinations, globally speaking, but really important if you want to make some strategic investments that help support the security of the region
mm.
and enable the development processes and economic activity in a country like Saudi Arabia or the UAE to continue apace. That helps explain that quite a lot. I mean, it's
I
in the
believe the
interest of
US at one point as well was also even there was some conversation about maybe there should be a sovereign wealth fund in the US. I
well,
mean, I don't
yeah,
know if something like that could ever exist in an American
well,
democracy, but
well, I think um, that this second Trump administration has forced all of us to admit that a lot of things that we thought maybe that could not happen can happen. So
Mm,
I definitely wouldn't rule out the possibility of some kind of sovereign wealth fund being created. Um, yeah, it
mhm,
was the President Trump did task um, uh, various members of his cabinet to look into this. The deadline has passed, but I expect that we'll hear something at some point. It's not so far. It's complicated on a federal level, but we do have
mm.
sovereign wealth funds in the U.S. States have sovereign wealth funds,
State
especially
funds.
the energy rich states. You know, Texas,
Mm,
Oklahoma, I believe, Alaska. There are a number of them, but that's on a state level. When you're talking about national federal resources, it definitely gets more complicated. I think
mm,
um, beyond that, you know, there is an interest in facilitating more Gulf investments into the U.S. We talked about this a little bit earlier in the past. Um, how do you the Trump administration really wants to increase investments into the U.S. foreign investments, and as we know, the Gulf is kind of generally regarded as, you know, really important, important global destination for fundraising and for capital, and that's so.
mhm,
There are a lot of ongoing conversations about how you make it easier for Gulf sovereign wealth funds to invest in the U.S. Across a range of different asset classes, and I think that in some ways is behind efforts to create a fast track for pilot program for CFIUS, which you know, from time to time does hold up different investments and it's prevented certain investments from happening. So uh, I think the idea, yeah, there will be more sovereign wealth fund related activity between the U.S. and the Gulf. I don't know if there will be a fully fledged U.S. kind of you know, sovereign wealth fund at a national level, but in either case, this is an interesting space to watch. But that, you know, that is moving in another geographic direction than the focus of much of our conversation today.
Yeah, I mean, yeah, I think another thing that I think I've been also observing, and I think is also interesting to watch. I don't know if you saw last week, GIC just announced their annual report, and it was actually written about how the amount of disclosure for this year's report is actually much lower compared to the previous years. Um, Even though, you know, I guess to some extent there's been some promises about increasing transparency over, you know, certain levels of reporting. And I guess as a sovereign wealth fund, you are using public funds to deploy overseas. Um, and it'll be interesting to see how much more transparency they can afford to be able to report as they move forward and grow in influence at a time like this where everything
Yeah.
is so kind of geopolitically charged, right? I think there was another report as well on GIC picking up some land or something. They did some investments in timber in Michigan. I don't know if you saw that.
Hmm. No.
I think it was a US reporter that picked that up, which is very surprising because it was actually an indication of GIC actually owning land in the US.
Okay.
Um,
Interesting.
yeah.
Yeah, I mean, we got onto this whole strand of conversation mainly because we're talking about the different objectives, you know, economic or non-objectives, and transparency is important. I think is an important part of that broader conversation. You know, at the end of the day, the Gulf countries, their governments are not constructed in such a way, whereas the you know, government officials need necessarily to you know, to double down on kind of making improvements in transparency for the sake of
Mm,
their citizens. I mean, it's not a huge. There are some people who are calling for that, but it's not necessarily a huge demand that influences sovereign wealth funds. And I think that's what fuels a lot of the questions, really, is because a lot of times the sovereign wealth funds, they're black boxes. They're not reporting. They're only reporting as much information as usually they have to.
mm,
I think some of them will decide to report a bit more to kind of explain the investment approach to kind of get ahead of concerns. We've seen some examples of, you know, bond issuances having to then, you know, they're as part of the prospectus releasing some
mm,
additional information. But by and large, yeah, I mean, um, these are not bastions of transparency. It makes it
Oh.
a bit difficult to study them. So it makes our job more challenging. So I don't expect there to be, at least in the Gulf. I can't speak to the Singaporean environment, but I don't expect there to be massive improvements in the transparency, at least not because of any bottom up driven pressure.
Hmm.
But what I will say, to get back to our kind of original question, is given that there's a kind of lack of clarity and it's not full transparency, where do we kind of settle on what the ultimate objective of a lot of these funds are, and how do you distinguish between the kind of economic and non-economic aims? Where's this kind of state objectives end and purely financial decisions end? And I've thought about this a lot. I've been asked about this from business people, from governments, from policymakers, from policy analysts, students. And I think for me, the best answer I can give is that it's ultimately economics that are driving these investments. And here's why. Not because there are necessarily only economic aims, but to me, it's clear that making sound economic decisions is ultimately going to accomplish economic and non-economic goals. So the better kind of economic decisions you can make with sovereign wealth funds, the better investment decisions that you can make, the stronger hand these governments are ultimately going to have, you know, in an economic sense. And also, if there are other objectives, be they diplomatic, be they strategic, or otherwise, having more resources at your disposal is going to support those. So I think it's still, to me, if no matter how I look at it, it seems obvious that economics are the key driver, not the only driver, but the key driver.
All right. Cool. All right. I think we need to wrap things up. Yes, I can definitely hear you, but we're going to bring this to a
Sure.
landing,
I,
actually. Maybe if you could share with the viewers, you have a book launch that's coming up in September. Am I right? Could you share a little bit about that?
we do not have official date yet, but be on the
Mm.
lookout for a announcement sometime mid October. I'm sorry, mid September. It remains to be clarified, but if you go to our website, Arab Gulf States Institute, you can see the upcoming events. We should get something in the works pretty soon, and like I said, mid September is looking like the most likely date there. But yeah, I encourage you. You can go to our website. You can also, I mean, my contact information is pretty easy to find. If this conversation has inspired anyone to, with different questions or to reach out, by all means, I'm more than happy to have conversations with folks and open up lines of communication.
Cool. And we've come to the end of the podcast. Thank you so much for joining me today, Robert.
That's my pleasure. This was a great conversation.